Welcome to the Why Not Real Estate Podcast, where you will learn top strategies from world-class real estate investors, both large and small. Why not? Tune in and get started today.
Mindset is probably one of the most important things in this business because I don't care who you are. I don't care where you came from. I don't care if you have $1 million. I don't care if you have $0. If you have the right mindset, you can literally do anything in this business and you just can't give up. And that's really what it comes down to. One of the sayings that actually got me through all this, because it was really tough at the beginning for me trying to break into this industry and get where I am, is like I always said to myself, water cuts through rock eventually. And I knew if I didn't give up, that I could make it a reality.
Hey, what's up, all of my real estate peeps? This is Brian Lucier with another episode of the Why Not Real Estate Podcast, where we believe investing in multifamily is one of the best asset classes in real estate, although on a few episodes we've been shown the light to some other opportunities. So today we have this gentleman. As I was stalking him doing my research, we've been going back and forth with each other since 2019, and we're currently managing a property that he's the broker for one of our clients. So I said, hey, why don't you come on the show? And he was gracious enough to join us. So ladies and gentlemen, I'm going to introduce him here today, and really looking forward to it. So our guest today is an expert in helping clients evaluate and purchase properties in the greater Boston area. A savvy investor himself, he truly enjoys the art of making even the most difficult deals come together. Amen to that, brother. He is an advocate for helping people reach financial independence through investing in real estate. Although he's an excellent agent candidate for single-family homes and smaller units, our guest truly excels in the spotlight of larger commercial projects that most wouldn't dare to enter into. He is a principal owner and an active participant of a very successful syndication company, Millennium Holding Group, which has allowed a large group of private investors to collect passive income while growing their portfolios without lifting a finger. While he has extensive experience in the multifamily and commercial market, our guest is also well-versed in managing contractors and vendors for deals involving construction. This is particularly helpful to investors who purchase the ugliest property in the neighborhood. He is great at running the numbers, visualizing potential, and executing the necessary steps to make a dream a reality for his partners, colleagues, and his clients. As co-founder of Candor Realty Group, our guest has helped build an extremely successful real estate team alongside John Bombachi, who's also been on the show, bringing a very unique perspective to the art of any deal and enjoys helping others reach their goals. In his personal free time, he enjoys traveling, camping, and riding his four-wheeler out in the mud. Sounds like fun. So, ladies and gentlemen, all of my real estate peeps and rock star entrepreneurs, it is my pleasure to welcome to the show today the principal of Millennium Holding Group and co-founder of Candor Realty Group, Matt Perimian. Matt, welcome to the show.
Thank you very much, Brian. I love the introduction. Thank you for having me.
I got to tell you, Matt, I always get a guest come on and say, I love the introduction, but I have to put the spotlight mirror right back on you. It would be nothing without your story. So it's your story that makes this so interesting. Matt, we have known each other for quite some time. Way back when I was selling some of my property, we were dancing around and possibly going to do some deals together. But now here we are on the show today. I know some of your background. I know some of your story. But for the guests watching this for the first time, maybe they don't know your story. Could you tell us what did you used to do before becoming a real estate professional?
That's a great question, Brian. So I'll run through this pretty quick. I graduated college from Suffolk University in Boston. I had my eyes set on finance. I was going to work at a big bank. I was getting my Series 7 securities licenses. I was going to be a stockbroker and a money manager. And I got out of school. I went through all the interviews, a lot of big banks in Boston. And it just, I knew I didn't want to do this for the rest of my life. Like I'm sitting there being interviewed by managers and it was like, oh, you just do what I say. We'll give you commission on XYZ. And it didn't feel right. And I knew I had to figure out something else to do. Um, I had a family friend who was actually a very large syndicator and still is in the New England area. He's actually one of the biggest, older gentlemen, probably in his 80s now. I won't mention his name on here, but he kind of laid the framework for me. And for a while, I thought I could work under him. And I was like, oh, I'm just going to go work with this gentleman. He'll show me the ropes and getting into real estate will be easy, right? No, not, not so much. So he ended up giving me a prospectus on one of his large syndication deals. And over the course of about 18 months, I studied that and I wanted to do that. Alongside that time, I started working as a commercial real estate broker at a Keller Williams firm back in early 2017, 2018. We were working on a very large commercial deal. It was about a 20 something $1 million deal on a Route 1 in Saugus. And long story short, it fell apart at the closing table. Definitely in part to my inexperience as a broker at that time, just being a young, early 20s. Didn't really know what I was doing back then. And when I worked on that deal for almost a year and I thought I was going to get this big commission. And then when it fell apart at the last moment, I had to scramble and find a new way to make money, or a different way that was much faster, because it kind of halted after that. And I got into residential real estate at a company called Candor Realty Group. They were great. They gave me a ton of training. I learned a lot there. But I never really wanted to sell houses. It was never my passion. It was never my goal. It was kind of just to fill the gap in income. I needed to make money and I made it work. And then I met my business partner there, John Babacci. And one day we actually just went to the 99 restaurant. He told me he wanted to start a real estate investing company. And I did as well. And from then on, I was like, I'm in, let's do this. And we've built it into a number of other businesses, which turned into Millennium Holding Group. We now have just a hair under 1,000 units. We have about 110 million in assets under management. So we've grown that pretty big. And we've sold off a number of assets as well. So to say it snowballed is really an understatement.
More of an avalanche.
Yeah.
So help me fill in a few gaps here. Suffolk University, you were a financial major, took a sip of that Kool-Aid, said, this isn't for me. And then what was that transition to get from financial advisor to broker? You'd mentioned an elder friend. So can you fill in the blanks on that timeline there for me?
Yeah, sure. So it all started when I got out, and like I spoke about, I realized I didn't want to do this. I had the family friend in real estate. I had an older colleague as well who was real estate versed, and I was like, this is what I want to do. So I just started applying to real estate agent jobs on LinkedIn. And I kind of just put together a cover letter, and I just, the basic cover letters that people do, regular resume. Here's my experience. I'm in college. And I shopped them around to probably, I don't know, 10 firms, didn't get any callbacks. And then one night I was like, you know what? Like, screw this. I'm just going to write how I really feel. And I'm going to put it in a resume and I'm going to blast it out to people. And it kind of just said to the tune about it was if you're looking for somebody who is a shark who's going to get the deal, like you give me a bone and I will go get it by any means necessary. I don't let problems stand in my way. I make shit happen. I will never give somebody an excuse. I just get answers and I make it happen. And I kind of put that in an email and I sent it out to a couple of the firms that were listed on. And I immediately got a call back and these guys were like, I want to meet you. Um, let's set up an interview because they were looking for people with that type of background. And that's when I got picked up by a Keller Williams team. At that time, it was called Land and Sea. They were with the Keller Williams. And this gentleman by the name of Demetrius Spanius definitely showed me a lot of the initial ropes in the commercial real estate industry as I came in and quite frankly didn't know anything. So that was great. And that's how I got my foot into the door, at least into the real estate space.
So you started out in your early 20s, and how old are you now?
I'm 32.
So 12 years.
Yeah.
This whole run has
Like
been
10 years. It was like 10 years, about 10 years.
10 years. And you're 32.
Yep.
I didn't get started until I was 38. So, yeah, you're young, healthy, and smart. So,
Thank you. I hope so. We'll see. Nothing's promised, Brian? I
yeah,
just
no
keep
day is
working hard.
promised. Yeah, you got to get up and do the reps every day. I hear that loud and clear. So this is good. It gives me a good idea on your mindset and where you were. And I'm glad I went back to ask that question because what you said you put into that resume letter is so important. You weren't trying to say what you thought people wanted to hear. You said, okay, this is it. No filters. This is me. If you're working with me, this is what it's going to be like. And it just, it just filtered out so much stuff that you weren't going to need to go through. So anybody who's hearing that, don't think that taking that safe road and saying, well, they probably want to hear that, I do whatever. Forget that. Go in solid. Matt, kudos on you for having the cojones to pull that trigger and write that email. And you mentioned the family friend, the investor, the gentleman who's elderly now, which I'm right behind him. And then you had another family or a colleague, friend of the family.
Oh, that wasn't a friend of the family. That was just somebody I had met in passing, who I'd become friendly with. He was a little bit older than me, and he was in real estate and kind of showed me some of the how to buy foreclosures and things like that. And I realized how much money there was to make in this industry if I really put my mind to it and focused on it.
So what year was that light bulb moment when it flicked on and said, okay, I think I'm doing real estate?
I believe it was about 2016, 2017 when I came to the realization that this is probably what I like, this is what I want to do. And I started trying to figure out how to get there.
Perfect. So we're off to a really good start here. So you're 12 years as an investor ish.
Have only owned property since 2020. 2019 or like late, like end of 2019, early 2020.
Okay, so when we first met, you were in acquisitions mode.
Yep, I was strictly an agent at that point.
Okay. Yeah, I never knew that you were the co-founder of Candor with John because I've known John like forever and never made that. So perfect. So here we are, right? 2019. I'm going to go back the span, just call it 10 years, right? So here you are 10 years later, almost 1,000 doors, 110 million under management and assets. So this part of the show I always enjoy. It's the time machine, right? So here you are. We've outlaid your timeline. Anybody who's watching the show say, okay, he started here and he ended up there. So I get it. I see how this could happen. Now, Matt, if you could go back in time, here's the time machine moment, tap yourself on the shoulder and say, hey, Matt, what advice would you give to yourself if you could go back to the beginning and start over? And then the second part of the question is, if there's a newbie sitting on the fence watching this episode for the first time thinking maybe I might want to do this, what advice would you give to that newbie starting out? But we'll start with you. If you could go back in time, what advice would you give to yourself starting over?
That's a great question, Brian. The advice that I would give to myself early on is definitely, I can't say I regret anything, but the biggest thing is you have to never, ever get discouraged. And it's okay to like momentarily be discouraged, but a lot of people face difficulties in this business. They might do a deal, they might lose money, whatever it is. And the biggest issue is you just can't stop. Don't get discouraged. Always keep your foot on the pedal with your eye on the prize, because I've lost a lot in this. I've made a lot of bad decisions when I started. I lost a lot of money, made a ton of mistakes. And there was times when I was like, hey, I almost got a regular job multiple times because I was like, this is hard. When my first year in real estate, I probably made, well, first year in real estate, I had to pay to work at Keller Williams, a desk fee, and I didn't make any money. So I had to pay to work there. I'm a young kid. I had no money at all. And my family, my parents, some of my friends are like, what are you doing with your life? Like, you don't make any money. Your friend's making 100 grand a year. I'm making less than somebody's working full time at McDonald's, and I'm probably working 50 hours a week. And I didn't make any money for my first whole year. So people are like scratching their head and they're like, are you stupid? What are you doing? And it did discourage me momentarily, but I never let it stop. And I knew what I wanted. And if I just kept chasing it, I would eventually get there. And I had the vision in my head, and that's kind of what I chased until now.
That's so strong. And again, point out to anybody watching this, you bet on yourself and you invested in yourself. Other people didn't see your vision, but you saw that vision and you knew you had the drive, the desire, the ambition to do this. Fantastic. So the advice you would have gave yourself is don't allow yourself to get discouraged. Yeah, you're going to have that valley every now and then, but just keep going. And then just don't stop. And I say this all the time to people. They say, oh, I'm going through hell. It's like, well, you know what? If you find yourself going through hell, keep going. Just like keep going. So now let's fast forward to that newbie who's watching this show. What advice would you give to that newbie who's seeing this for the first time, getting exposed?
Um, what I would say is for a new person is, a lot of people are like, oh, go find the deal, go find money, go buy your first property. Um, the biggest thing for a newbie investor trying to get into real estate, I would say two things is, one is go find the best agents, go find the best investors in your market and go take them out for lunch, give them a call, send them an email, and just find out what they are looking for. Because if you get a big firm, like even ourselves, like, and guys call me and they're like, hey, what can I do to get in this industry? I have no money. I have a lot of time. And that's usually people have one or the other. They either have a lot of time and no money, or they have a lot of money and no time. So for a newbie, I would expect them to have a lot of time. Just get out there, watch videos, figure out what these bigger investors like myself are looking for, and just go out there and find them a deal. And you don't have to wholesale it. You don't have to agent it. You don't have to broker it. There's plenty of people out there who, if you just give them and hand them off a solid lead for a good deal, you will get rewarded. Like, I will pay somebody a finder's fee of anywhere from 10 to as much as $50,000 to bring me a deal. They don't need to lock it up. They don't need to put under assignment contract. I'll buy it with my own contract at the closing table. I will give them a finder's fee. And if you work with those people from the beginning and you understand who in your market is like the leaders and what they're looking for, and you can help them achieve their goals, they're going to help you along the way and train you. And that's one of the most important things.
Again, your mindset is skewed in a different angle than somebody who might be seeing this for the first time because you said something that's gold. And for you, it was probably just like, oh, yeah, that's what you do. You said to find the agent and investors and find out what they're looking for. And a newbie mistake is I come to you and say, hey, what can I do for you? And how do you know the answer to that? You don't know my skills. You don't know my strengths, my weaknesses. You know nothing about me, but you know everything about what you need. So you framed that question for that newbie who's taking notes. Make note of that. Don't make it about what you and, oh, what can I go in and do there? No, no, no. That's not what's needed. What's needed is what somebody like Matt or John needs in their business. What's the problem they need to solve? Like if you ask me, it's my number one networking question. What do you need today in your business? That's nothing to do with me. I mean, you might need a roofer or whatever. Okay, well, I know this guy and I can hook you guys up. And that's it. I transactionally solve the problem. But your insight to ask the question and get FaceTime. Absolutely. What are they looking for? What's the problem you have in your business today? So I'm really going to enjoy this because the questions I'm asking you, the answers that you're giving me are like a step above on the mindset because you sat at that desk for a year watching people at McDonald's making more money than you. Not that
Yeah,
there's anything wrong with the people who were working at McDonald's and feeding their
not at
family.
all.
That's fine. But you had a mindset, a bigger vision. All right. That was some really good stuff.
And
Any
when you say that, Brian, too, I'll also bring that up. Mindset is probably one of the most important things in this business because I don't care who you are. I don't care where you came from. I don't care if you have $1 million. I don't care if you have $0. If you have the right mindset, you can literally do anything in this business and you just can't give up. And that's really what it comes down to. One of the sayings that actually got me through all this, because it was really tough at the beginning for me trying to break into this industry and get where I am, is like I always said to myself, water cuts through rock eventually. And I knew if I didn't give up, that I could make it a reality.
I'm writing that one down. Water cuts through rock eventually.
Mm-hmm. Like a river or a stream over a rock, and you see it over time, it'll cut through it. So, and I kept saying that to myself in the hard times, because at the beginning, this industry will chew you up and spit you out.
A lot of people aren't prepared for that. You know, they see that late night infomercial and it says, "Oh yeah, you could just collect rents and drive this fancy car and live in this fancy palace." And it's like, I say all the time, real estate is an easy business to understand, but it's a hard business to do. It's easy,
Absolutely.
but it's hard. So we're flying through here. Any other advice you would give to a newbie who they're trying to figure out what their next step is?
Absolutely. So the two most important things as a newbie is you need to get exposure. You need to get your face out there, go to meetups, call people. FaceTime is extremely important. You have to build a network. And once people start to see your face over and over again for a longer period of time, like over a year, and you can build those relationships and people start to know your name in a market, that's when you actually start to get that taste of success, because there's no replacement for time. So you can work extremely hard, but there's always that element of time, and you have to be dedicated and committed to put years into this. Because I think too many kids jump in and they do it for a couple months. And they're like, I didn't make any money, and they jump out. All I can say to a newbie investor is get in, stay committed, and just keep going. And tell them, like, listen, you're not going to make money for as many as 2 years, but if you continue through it, 5 years from now, they'll be very successful, or start to be very successful. But don't get discouraged, because you're not going to make money in this business early on. Most people aren't. It's very difficult.
So that's number one, get the exposure, build your network, FaceTime. And I've heard that said at many RIAs before. they'll say, okay, who's a newbie here? And they'll say to the newbies in the room, it's like, good, this is your first time here. Keep coming, because all these other people in the room, like you said, it takes about a year for people to see you there. And then they say, okay, he's of my tribe. Now I can open up to him. Maybe I can share a deal or find out what he's going on. First time there, it's like, kind of wait and see. But, to your point, if you've been showing up and if it's once a month, you sacrifice 12 nights, big deal. Show up, be counted, be there, be present. So
And
that was your number one second round for the newbie. What's your number 2 point second round for the newbie?
number two, like I said, mindset, and I know you're going to ask me questions about books too, so I won't touch on that. But one of the most important things I feel that people disregard in this business is you can be an excellent investor. You can know all of the real estate lingo. You can know how to do deals, but equally as important to your real estate skill set, you have to take care of yourself. And like personal development is by far the second most important thing, because you can be an expert and you can be a real estate genius, but if you disregard other aspects of your life, your personal relationships, your personal health, you will not be able to elevate yourself to get to the next level.
100%. Is this our first time actually seeing and meeting each other? Has everything been on the phone before?
No, I think we've met at, I know we've met at Ria's back in the day. I remember you used to have your name and you're like, I buy big buildings.
Yeah. Okay.
That stuck with me.
And at that time, I was wearing big shirts because I was 200 pounds and hiding it well. And now I'm a grandpa at 200 pounds. Grandpa's.
Congratulations.
But to your point, that balance, that life balance, right? I can be work, 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 but am I reading? Am I eating well? Am I living well? Am I healthy? Am I taking care of my body? Am I taking care of my mind, my family, the relationships? And, I don't know your personal situation, but with that mindset, if you had to adapt into some situation, I'm sure that you're going to be there present. And, I would wrap that up there too and say, be present, even though it's equally important, the self-development, the learning, the books and all that stuff. And we'll get to that, be there in that world, not just, okay, I'm only a real estate guy, and really, really smart. I'm going to push it. Is there a third point for a newbie?
No, I think that really encompasses it all. I'll touch on some other stuff later in the book, but I can't stress enough that personal development is so important. And I know a lot of people who have been in this business for a while, and a lot of times they're not self-aware that they're disregarding that part of their life. And that's one of the reasons why you see a lot of these, like, especially the people have been in this industry 10 plus years. They already have some money. They've already done a bunch of deals. They own quite a few apartments, but they've stopped growing. They've stopped excelling. They've stopped leveling up. Especially with the culture that is, I feel like in America today, where a lot of people don't want to work. It's honestly like being so driven is looked at as a bad thing in a lot of cases. And you have to be almost like a little bit crazy to do this. So
Just a touch.
yeah. So maybe that is the third thing. And it's, hey, like maybe you're a little bit eccentric or somebody's extra eccentric, or you might think, oh, am I too crazy for this? Like, am I too rough around the edges? I know guys in this business who have tens of millions of dollars who have made it from like federal prison in their past life to being extremely successful real estate developers. And that's it. You can be anybody you want to be if you just have that right mindset and you're not afraid to show that side of you. And don't be like, I think a lot of people maybe they feel like they have to pretend or be a certain way. And it actually holds them back from just being genuine and just focusing on the prize. And I feel like the anxiety that people have in that sense holds them back because the way that they look at a real estate investor is, oh, they have a suit coat on, they're very professional, and that there's nothing wrong with that. That's great, it's wonderful, but you don't have to be that person. And if you can just be genuine and be okay with that, it's going to take you a very long way.
I love, again, your mindset. And for you, it's commonplace because this is how you think every day. But I'm having a conversation with you and I'm seeing how you've woven all the way back to that resume letter where you just said, okay, I'm just putting it on the line. This is who I am. All the way to the advice that you're giving to that newbie today to be genuine. It's like right there. It connects the whole thing. Um, know your niche, because I see what you've told me so far. You started out residential, you started the RE investing company, you're an agent, you've progressed, you've leveled up all the way down that road, but all that time you had that focus, you knew where you were going. So for that, you knew your niche, you knew your path. So for that newbie, I would just add that one ingredient to everything that Matt's graciously added here. Just know your niche. I mean, so many people on the show, they've started as a wholesaler, then they were a flipper, then they bought apartments, and now they do hard money, and now all they do is hard money. But it's, there was no step along the way that they couldn't have taken to get to where they are.
And now that you say that, that's actually one of the really important points as well, is especially for young people. I can't stress this enough. If you're a young person, please do not jump around and do multiple things.
Yeah.
If you are people that jump around and they're like, oh, I want to be an electrician, I want to invest in real estate, I want to do something else, those people never will be successful. Unless you pick one thing and you put 5 years of consistent dedication into it, you will be successful. But people that jump around, they're like, I want to do this, I want to do that, I haven't made money here. You might as well just go get a real job, because with that mindset, you're never going to get anywhere. And I can't stress that enough. And I hate that when I see it in people, when they're just jumping around and they complain. It's like, because I know that you can't be successful until they change their way of thinking. So I actually think that changing your way of thinking is more important than anything in this business, and honestly in any other business, to be successful. That's the key to success.
Really good stuff. And, in my later years, at the beginning of my real estate world, I was like rolling up my sleeves, doing all the hard work. I thought I could do it all. It wasn't later until I started to read more, understand more, learn more, where I could, expand the vision that I had for myself. And now, some people know it, some people don't. I'm staring at the Caribbean, enjoying this lovely conversation with another real estate peep, and my world couldn't be better right now. I love the world that real estate has created. So, and you got to pay your dues. I was told that at a very young age, 16. No matter what you want to do, no matter what you trade, you got to pay your dues. And you paid yours. You were at that desk for a year. Highest respect for you to get through that. That's hard. The other thing about these investors, if you get to have lunch with them, I've said before, it's like work for them for free for a year. You're getting your education, right? Don't worry. If it's about the money for you, then you're in the wrong place. If you're there to learn how to spin gold out of straw, then stick around. So
You brought up a really good point there that I want to press upon. One of the biggest issues too that I see if you're a young person is you cannot chase the money. If you start chasing money, it's just, I don't know if it's the laws of the universe, whatever it may be, you have to chase the deal. Do not think about the money. Just think about the deal, and as many deals as you can get, and transactional. Do not be like, oh, I want to make this amount of money, because if you chase the money, it doesn't come.
yeah,
The money should be an afterthought, and deal execution should be number one.
Right. And again, the mindset will work against you. If I think I'm always chasing money, then I'm always chasing money. I'll never have abundance. I'll never have enough because my mindset is I'm always pursuing it. Thinking about the deal, it's like, okay, this is the real estate, and there's a reason they call it real estate, which is a great segue, right? So 110 million in holdings, over 1,000 doors. I mean, I can't imagine how many transactions have come and gone because I know there's an ebb and flow. You don't always just accumulate. Sometimes you ditch the dogs, keep the diamonds, refine the portfolio. So here is where I like to go into the deal dive, right? The deep dive. What is the best deal you've done that comes to mind? What type of property was it? How did you find it? And how did you finance it? So what's the best deal? How did you find it? How did you finance it? And what type of property?
That's a great question, Brian. So our best deal to date is going to be an apartment complex in Lowell, Massachusetts. Um, there was a large apartment complex in Lowell, 132 units. It had been shopped around for years. Um, it was actually built on an old dump. The floors were wavy in it. It looked, when you looked in it, it was scary walking through there. And most people were like, "Hey, this building is not for me." Um, so we were able to work with the seller. This was like right during the beginning of COVID, direct with the seller. We were able to put it under contract. John and I put it under contract for $20 million. Me and him thought we were going to go through HUD financing and essentially buy it with none of our own money in terms of, because at that time HUD was doing for affordable up to 95% loan to value.
Okay.
So we thought we could JV it, put down little to no money and get this giant deal pushed through HUD. And, we thought it was going to be easy. That is certainly not the case. Fast forward, it took us 12 months to close that deal. All the headaches in the world, and I'll go into that as well. So we had a kind of a crazy seller, older gentleman. He was 83 years old, and had to fly back from Florida to manage this property on his own because the property manager felt unsafe during COVID to work in those environments. Mm-hmm. So at 83 years old, he came back to self-manage his 132 unit building in Lowell. So that was a big pain point for him. And his wife was like, "You have to sell this thing or I'm like, I won't deal with this. We shouldn't be doing this at our age." So he wanted to sell, we wanted to buy, and I'll start going over some of the problems that that we ran into doing this deal. So we tried to push it through HUD. We thought we could get it done. We ran into a roadblock of HUD wanted us to show, I believe it was the loan amount, which on that property was $15 million. They wanted us to show accumulative assets of 15 million or more in order to close on that. We didn't have that. I lived at my parents' house. Had no money. That wasn't going to happen. So we kind of hit a roadblock there. I went to that big investor that I had spoken about who got me into this, had lunch with him in Watertown. John and I did, and we were like, "Hey, this is what we're dealing with. How do we get through this?" And he kind of laughed at us and he goes, "Yeah, you guys aren't buying this through HUD." He's like, "You're going to pull your hair out. You're going to be dead before you get this thing through HUD." So he put us in touch with some lenders at CBRE. At that time, it was Mike Pracken, and we got moved down to Matt Marshall, who's been a wonderful lender at CBRE for these large deals. And we started working through Fannie Mae, Freddie Mac loan, and it was a much different experience. We were able to get through underwriting, like basic underwriting. That went well. We were well on our way to get this deal done, and then closer to the closing table, we needed to get a phase one, which is a 21E in Massachusetts, an environmental report because of where this property was located. So we hired a LSP, which is a licensed surveyor, I believe. LS professionals. I don't know the acronym, but we hired a LSP out of our own pocket. We had to pay $15,000 to have this guy start cutting boreholes in a brand new parking lot from the seller, which you can only imagine how that went. During this, they found out that there was some chemicals that some VOCs, volatile organic compounds. The bank was like, yep, nope, we're not going to finance this because this either you have to figure out a way to write this and hire somebody to clean up the groundwater that had been partially contaminated. So we were trying to figure all that out. Realize that in order to do this, you have to get monitors, you have to pump water in. It's extremely expensive and it's extremely time consuming. So as we were trying to work through that, talking to the seller, we didn't want to tell the seller right away because he was an older gentleman. And if we thought that if we told him immediately, he would just blow his lid. So we kind of gathered all the data, talked to some experts, figured out what the next phase forward would be. We started talking to the seller and his attorney, and the seller was like, "What are you talking about? I already had this site approved. This is an old, it's contaminated from an old dump that was essentially next door. The EPA knows about it. They signed off on it. This already passed the phase one." So that was a lifesaver. After that, the appraiser went in and saw the floors and saw the building, and he was like, we need an engineering report because we think this building has structural issues. So after going through that whole process, we hired two structural engineers. They both signed off on the building after a very large bill and a lot of time wasted. But we were able to get through that. They gave us a sign off.
Nice.
After that, we moved to closing. We needed to raise $5 million. Yeah, easy, right? I thought it'd be easy. I can do anything, right? Nope. It's very difficult for a newbie investor to raise $5 million bucks, or newbie syndicator, I should say. So John and I were like, "Uh-oh, what do we do?" And at that time, John had started meetups, these pretty big meetups in Lowell, and we had a pretty good attendance. And there were two people there, Todd Wheatley, who is still a very good partner today. We work together every day on all these deals. Couldn't have done it without him. And our other partner, Nate Janino, he's doing some other stuff now, but still he was a great partner. And we had to bring on those two guys. And we were able to raise, and we did it by the skin of our teeth, the $5 million that we needed to close this deal. But you never know. You have to stay agile because it's going to change. You need to be able to pivot and bring on more people, bring on more capital, give up more equity. Sometimes you got to do whatever it takes to get the deal done. And that's one of the differences between people who are successful in this business and people who are not, is you are going to come across many, 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 many problems in buying large assets, especially. Just work through them. Like there's always a solution. Don't get discouraged. Just keep figuring it out, reaching out to other people. You have to have resources because it might seem like a mountain that you have to climb to try and get over this. But one phone call to the right person, you could solve that problem in 3 minutes or less, or you could try and figure it out yourself, and it could take years, if at all you do figure it out. So that's one of the other important things.
So a lot here, and we're just up to the closing table. So this
Yeah.
so some of my comments here, that sponsor position when HUD wanted to see, and I've seen other investors run into this, if I'm going to go do a $20 million deal, like you said, the bank wants to see that I have enough assets to cover the mortgage. So
Mhm.
anybody who's seeing this first time, if you're going to do what Matt and John did here, that's something you can start thinking about as you're doing the deal, maybe bringing in a sponsor. And that's what I thought you were going to say when you went to go see this gentleman and had dinner with him, that maybe he was going to come in as the sponsor on the deal. So what does that mean? That means he comes in as one of the partners in the deal, and because of his net worth, the mortgage goes through. So that's another way to solve it. So he directed you another path to lending that would work. Okay, we got there. And then eventually you solve the problem with your two other investors. So there's two or three ways that that could have happened, and you found that path and made it happen. The environmental, oh my God. And yeah, I'm curious, did you spend a lot of that money up front before you mentioned it to the seller?
Oh yeah, I mean, I think we were into that deal for we were all into that deal for I think about 200 grand in due diligence cost.
So was it maybe 80 for the environmental at that point?
Um, I think it was probably about 50 at that time
Okay.
that we were into it for. It's been a long time now. It's been almost 6 years, so I don't remember, but I believe it was about 50,000, and then we had a whole bunch of other fees. The loan processing fee from Fannie and Freddie, they charged us. I forget some of the other fees that were involved in there back then, but yeah, we had a lot of our own money risked in that deal. That if it didn't go through, we weren't going to get it back.
That's it.
Mhm.
So here's a $50,000 tip for anybody looking at a deal like this. If you get that first initial phase one and they see something, I've done this on commercial deals too. It's like, okay, hey, the phase one thinks it might not pass. Go to the seller, because this gentleman, for him to buy that property, he had to pass an environmental phase one way back. So it exists somewhere. If it's a commercial property and you're buying,
Oh, he bought it cash. He bought it cash, like back in the 80s. So
well, all right. So at some point in time, he refinanced or did something where he needed environmental.
yeah, I believe he did take out a loan on it, and that's when they had brought it up.
So anybody listening to this, if you're buying a commercial property and the environmental comes up, know that there is a past environmental out there because the previous owner owns the building. And unless this gentleman who paid cash, right, then you probably don't have to do the environmental, which is nice. But yeah, it exists out there. So
Oh,
that's
I forgot to mention this too, Brian, is all 132 units were on written leases, no property management software. Everything was pen and paper.
okay. Now you just gave me a headache. All right. Okay. Well,
Pen and paper financials, everything.
all right. Well, okay. I bet you it's not anymore.
Yeah, no, it is not.
Okay. So that is a wonderful story. And I'm glad it's your story and I'm listening to it and didn't have to live through it. So thank you for that. But you did live through it. That is amazing. So here we are, right? $20 million purchase, five down, all the warts and frogs you had to kiss to get to that closing table. Next set of notes. You've owned it 5, 6 years?
No, I'm not. I'll get to that. We
Okay, so here we are at the closing table. Any other details we need to know?
Yeah, so one of the other things I'll say is these big assets are always wanted by REITs and very large high-end firms, especially in New England. Um, but for them to try and underwrite a deal and close it, they can't. A company can't just buy a bill. A large corporation can't buy an asset like this with doctored financials. People are running cars and all their personal expenses through, and the bank goes look at the financials and they're like, "This is." We see what's going on, but Big corporations don't really want to buy something like that. So one of the value adds I will touch upon here is if you can take a large asset and take it from, call it the previous century into current, bring it online, digitize everything. There is so you don't even have to raise the rent roll because the value that you create for a much larger institutional buyer to now close on that is it provides a tremendous amount of value.
Oh, wow, right. You repackage the property without changing a thing.
Mm-hmm. Well, you can, yes. So we closed on. I just wanted to mention that. So we closed on it. We started our onboarding process. It was difficult. All you know how renovations always cost a lot more than you anticipate. Navigating that, but what we were able to prove is that renovated units were renting anywhere from 30 to 40% higher new lease ups than previous. So we about I would say 6 or 7 months later, I got a call from a New York commercial broker. His name was Sam. Uh,
Solomonov?
no, shit. Finkel.
Okay.
His name was Fam Finkel. Finkel something. I'll touch upon that. And he's like, "Hey, I have a buyer that's interested in purchasing in your property." And I started talking to him. I vetted him a little bit, and I go, "All right, this guy uh, knows what he's talking about." So I said, "Okay, call me back. Let's tomorrow. Let's when I'm with the other guys, we can chat with you." So we owned this thing for about 6 or 7 months, Brian. We're able to show that rents were significantly higher. This was in the midst of COVID. Um, so the world was crazy. Interest rates were extremely low. Um, so Sam ended up bringing us an offer. Like I said, 6 or 7 months later, after reviewing the financials, for $8 million more than we paid for.
I I mean, I don't know if you're going to be able to see this.
Yeah, I can see it.
I did the numbers when you said 30, 40% more. I plugged it in. I got 28 million. All right. So there was a lot of brain damage for that year for the both of you. You had to expend a lot of stuff. So let's see. Let's start playing with this, right? Well, right off the bat, you had to pay off the investors. You had to pay off the
Well,
mortgage.
I'm not. Okay, I'm not done just yet. So two
Okay,
problems.
keep coming, keep coming. I
Two
like where
problems
we're going.
there. So the problems there were, wow, like what is this? Is this real? So we started digging into the buyer. They're a very big institutional buyer, actually on Newberry Street in Boston, over $1 billion fund. So they were more than bona fide. So it comes back to our problem. We had two problems. We had the first one is what's called yield maintenance on these larger deals, which is a type of prepayment penalty that's tied to the treasury note spread. So whatever our interest rate is and whatever I'm on go.
Hey, John, how you doing?
How are you?
John, he's on the podcast.
Hey, surprise!
Make sure you're closing at 8:30 tomorrow.
Okay.
Don't be late.
He calls. That was nice to see John. We're going to leave that in. I like that. So, defeasance.
So yeah, so the yield maintenance.
Yeah.
So the yield maintenance is tied to if we get bought out of the loan amount, that the bank has to place that debt somewhere else, and they're going to place it in treasury bonds. So essentially, we are responsible for the delta between what we were paying for interest rate and the rate that they're getting on a T-bill. So we had about, I think it was $1 million. It was $1 million prepayment penalty at the time when we got the offer and we ran the numbers.
So what'd you do?
So we were like, hey, we're happy to sell it to you, but the problem is we didn't care. We would have paid the $1 million prepayment penalty for an offer like that. But the problem is it was less than a year, Brian, and you don't want to give your investor short-term capital gains. So we were stuck in a hard place here. So we told the buyer, hey, like we're happy to close on this. We have to make the closing date, so we own the building for call it 12 months and a couple extra days just to make it easy. So we worked on this. The offer in the time we had to wait, interest rates came up pretty significantly. So by the time we were owned the building for 12 full months, the offer got beat down to about 26 million. But the good part is that in doing so, treasury bonds came up. So it basically eliminated our offer was $2 million less, but it eliminated that $1 million prepayment penalty because the yield spread had evened out.
And you didn't hurt your investors.
Yes, exactly. So then we were able to close on it, and we were able to give our investors a 88% return in 13 months. Damn. And one of the other crazy things I'll say too is that at one point we didn't know they were going to close. And by the time we were ready to close, Brian, they actually went from essentially, we don't want this building to closing in 30 days because they had identified this property on a 1031 tax exchange that they were doing. So we thought they were going to close this thing in 60 days and we were going to give them 60 days. They closed this asset in 30 days.
Anybody watching this, like a typical house closing might be 30 to 45 days. A smaller multifamily might be 30 to 60. 132 units we're looking at here, plus all the warts and frogs on this plate in 30 days. This is unheard of. So was this all fueled by the 1031 exchange?
Yes. So they had a gun to their head to close. We wanted to close. So it was definitely an interesting experience. I've never seen anybody work so diligently to get a deal done in all my life since then. And I don't think we could close a deal like that in 30 days now. It's like next to impossible, realistically. Even if you're paying cash, it's very difficult, as you know.
All right. So are we ready to look at the deal now and see what the
Sure, yeah.
Okay, so $20 million asset, $5 million from investors, $15 million from the banks, $250,000 for your tests and closing costs. What type of renovation number were we looking at there?
I think at the time we probably renovated 10 units. I think we estimated like 16 grand for a unit turn. I think at the end of it, it cost us closer to 20, probably like 20 grand. So we probably put, I would say like $250,000 into it in that time frame. And one of the things that we use is we got an interest only loan. So
okay.
For anybody that doesn't know, interest only loan is you're only paying interest on a lot of these commercial loans for the first year, sometimes 2 years. So your cash flow is a lot higher. You're not paying down your principal, but that increased cash flow from not paying down the principal gives you the ability to stabilize the building, put that money back into the property to start renovating and pushing up rents. So that was a big help for us. So we didn't have to use our own capital. We're able to use the capital from the rents and the positive cash flow that we didn't have to use to pay down the principal.
So everybody's paid off. We account for the renovations. We account for the closing costs, all that. Net 20 million. Let's see. The expenses were 20,500,000. Maybe your net is between 5.5 million over 13 months.
Yep, exactly. And the limited partners walked away with an 88% return in that 13 months.
Not bad.
No, not bad at all.
So your equity on that deal, and we'll divide it in half because you and John were partners, right?
Well, we had brought on those other people as well. So the management team walked away from that deal. And let me just put this out there to begin with, Brian, is on our first deal, like now we do 50-50 equity splits with an 8 pref. if you want me to explain that, I can, but you guys can probably look that up on the internet and they
Yeah.
can explain it better than I can.
We'll come back to that. So you got 4 seats at the table.
Yep, but this is a new deal. This was our first syndication ever. So we offered the investors an 80% equity split. We only took 20% of the equity, no fees. We didn't charge any fees. And that's why it was great for the investors. So the management team ended up taking about $1 million profit from that. So
I got 1.1 million.
yeah.
All right, so we'll divide that by 2 because it's you and
It
John.
was four. It was 4 people at that time.
So
Because it was me, John, Todd, and Nate.
so Todd and Nate as LPs got the 83.
Well, they're actually part of the management team. We had brought them in
So
to
they are
help us raise
LPs.
capital.
So where did the 5 million come from?
So myself, John, Todd, and Nate, we all raised that capital from LPs, and Todd and the four of us were general partners on that deal.
Okay, so the general partner split at the end of the deal was about 1.1 over 13 months.
Yep.
It's 83,000 a month. Doing the deal. I mean, like I said, it's a easy business to understand, but it's hard to deal with the frogs and warts.
Hard to execute.
Yeah, hard to execute. And all those moving parts, the juggling the chainsaws. I mean, when I started this, I had a full head of hair.
You want to know something? I hear that from a lot of guys, Brian. It's not just you. This business is stressful.
So, I mean, that's not bad. I mean,
I'm lucky so far, but we'll see,
Yeah, well, you're doing
Knock on wood. Knock on wood.
No, you're doing great. And you got to close in at 8:30 tomorrow, so that's even better. Yeah, I mean, here's where I say it. Why not? Why would you not do this? I mean, okay, so you got to put on your big boy pants. You got to wake up in the morning. You got to have a brass pair of cojones. Sorry, ladies, but whatever it takes for you. And you got to get out there and not give up. Not just say, okay, well, this is too tough for me. Wah, wah, wah. I guess I'll go punch a clock. And, some people are going to do that, and that's okay. But in 1 month, you cleared better than what a college graduate was going to clear with probably a $500,000 debt on top of it for that education. Did you get an education? Absolutely.
Absolutely, yes.
Did you get paid for that
Yes.
education? That's the difference.
And one of the things I thought that was important too is I have to say this is we never took any of that money personally. And one of the ways that I was able to scale to the amount of units that we have now, just about 1,000, shy under 1,000 probably. It changes daily because we buy and sell stuff. Is that we never took any of that money. I rolled it into more projects and more assets.
Yeah.
The only money that I actually used for my personal life was the money that I was making as a real estate agent. So one of the biggest things is keep the money in the deals, live frugally, and don't go out there and spend your first deal check. Go buy more assets, go buy more deals, go buy more good real estate, because too many times I see guys go out there, they do their first deal, they make $100,000, they go spend it on a fancy car. Like, that is the worst thing that you can do.
Yeah, and this goes all the way back to the mindset. What's a liability? What's an asset? An asset puts money in your pocket. A liability takes money out of your pocket. I saw a really good quote the other day. The rich have large libraries. The poor have large TVs.
I love that. That couldn't be said better. That's beautiful.
This is a wonderful story. Anything else you want to tell us about this deal? And this is a cool one. I like this. I like that there was a lot of dirt that you had to get through to get to the finish line, And thank you for sharing that, because most people would only say, oh, yeah, everything was rainbows and unicorns.
No.
But like having to drill through a brand new parking lot to take water samples and pump in water, like that's not a unicorn.
No, especially when you're trying to deal with a guy who's older, and he was not. It took a lot of negotiating to get him to allow us to cut holes in his brand new parking lot, to say the least.
All right. Well, you did it and you got it done. You made it to the finish line. You had a nice payday, and even smarter, you reinvested.
Mhm.
So, I mean, the four of you coming in with another $1 million, you could have pulled down another $20 million asset without having to do the raise.
Mhm.
That's where the magic happens, because now you're leveraging your leverage.
Mhm. And we were actually able to roll that into a 40-unit building in Allenstown, New Hampshire, which was pretty cool. So we still have that one today.
Nice, nice. So that was a cool story. I'm sure you've got like another 30 properties, but we're gonna respect your time. What's the biggest hurdle you've had to overcome as a real estate investor?
The biggest hurdle I had to overcome as a real estate investor is actually nothing to do with real estate. It goes back to the personal development stuff. Um, and I'll touch upon books, like reading books about personal development, um, or is definitely the most important thing and the biggest hurdle that I've had to jump, um, because and I look at, and I'll relate this to, I'm also looking at my businesses now as well, and I relate it to this quote: is you can have a wonderful business and you can have a bad operator and it will fail, or you can have a shitty business and you can have a dedicated, driven operator, even if they have no experience, and they will succeed. And that just plays into the mindset. I had to elevate myself on a personal level, my relationships, the way I operated. And that was probably one of the biggest hurdles for me, is trying to develop who I was, like figured out what I liked, what I was good at, what I wasn't good at, um, and understanding my weaknesses, and not, when somebody's like, hey, you're bad at this, Matt, and not trying to fight them, and understanding like what it was that I needed to work on to excel my life forward, and not having any judgment towards people that told me that I sucked at this, or my attitude was wrong, or I wasn't professional, or something like that. And once you kind of fall into who you are and you get that self-confidence, that's more important than anything. So it's the personal development aspect of it, and the struggles that you have to go through, both personally and internally and externally. And I think if that is one of the biggest hurdles that people have in all aspects of life, is whether it's relationships, whether it's business, is they're trying to figure out how to do a big deal, or they're trying to figure out how to like get their partner in life. And it's all the same thing, is if you're not ready personally, even if the deal is served you on a silver platter, like you're not going to be able to do it most of the time. So working on myself was definitely one of the hardest things I had to do, but brought me so far in life. And I dedicate a lot of that to the books that I read about personal development that had nothing to do with real estate, that got me to where I am.
So I journal every morning. I've got a routine. It's boring, but it's me, right? I've built this routine. Every 4 or 5 days, maybe once a week, I'll write the same sentence in my journal. Continue to become the person to receive abundance.
Absolutely.
It sounds a little faux, but that person who wants to go do that big deal, if they don't have the mindset to do that big deal, they're not going to pull it off. Just like you said, you have to become that person who can pull down that deal.
Absolutely.
So I'm chomping at the bit. You've been mentioning books. I don't know how well you can see it. My old setup, all my books were behind me. Now they're kind of spread out here. You're going to be giving me some mindset books, and I'll be hitting the Barnes and Noble when I get back to the States. I'm kind of really looking forward to this, because I think you're going to bring the real fire right now. So let's get started. and I anticipate more than one or two books, so I'm excited here. Is there one book that changed your mindset to be a real estate investor?
Absolutely. And this is like a cliche book, but I probably read it 18 times, and that's Think and Grow Rich. I used to have it on audiobook in my car instead of music. I wanted to blast that into my subconscious at all times of the day for years. And the whole idea of, I guess I would call it manifestation, but that's a little like a little cheeky, I guess. But it's more of, you just have to put your mind to something and you have to go get it, and don't let anything stand in your way. The second book, which is a lot less known, is called Hard Times Create Strong Men and Good Times Create Weak Men by Stefan Arias. That is a wonderful book.
Hard times create strong men.
Yep. Let me just get the exact, and then the second one is
Yeah, I'll be able to. Oh, he's got two books.
no. He has multiple books, but this is the one that I like. Hold on, it's just loading over here.
Yeah, that's fine. Yeah, and I'll be putting all these on the screen in the final cut here, so people will be able to find these books.
It's Hard Times Create Strong Men. That actually is the title,
Perfect.
and it's by Stefan. His last name is Arniel. And that was a good book. That's a big personal development book, especially as a male in America today. A lot of like masculine stuff can potentially be looked at as negative based on the society that we live in. And it's not a bad thing to be a man in this world today. And I feel like the new generation is almost like that. They're taking on feminine roles or feminine aspects of their life, as opposed to just being who they are, and I think that book really shaped the way I thought about all that. And that was very powerful for me, and that was one that helped me move the ball forward. It's definitely not for everybody. It's a pretty it's an unfiltered book, but it's a lot of the hard topics that people don't talk about today because they might be taboo, or it's just things that people don't want to talk about, especially in America anyway. So
I think I'm going to enjoy it. I'm not. I'm not.
Really? I didn't know that.
Yeah, no, this is the Netherlands. I'm down here in the Netherlands. I don't speak Dutch.
Are you full time down there now, Brian?
I'm here for maybe a 2 month stretch. Then I'll go back. We've got offices in Massachusetts and LA, so I'll do the world tour for about 2 or 3 weeks. Then come down here for 2 months, and that's been my life for the last 4+ years, and I absolutely love it.
That's awesome.
All right, I want to stay on the hot metal here. Is there a third book?
Um,
And if you want to just roll out book titles,
yeah, I mean, there's the book that I will say, and some of it might be questionable, but there are a lot of really good quote, like really good ideas and thoughts in it, are The Way of the Superior Man by David Dita.
just writing it in there. David Dita.
Mhm. And what I will say too is that the other book that I said, Hard Times Create Strong Men, the author of that, he's a very, very successful real estate investor in Canada.
Who would have guessed? Who would have guessed? All right, I'm gonna get greedy here. Can you give me another one?
um,
Anyone that you like. This is your show. You no filter.
okay, I'm gonna look. Let me see. 1 second. Sorry, I got to go back to my Audible because those are like my big three. If I had to jump into four, I would. I mean, I would say The last one would be books by Joe Dispenza. I don't know if you're familiar with Joe Dispenza.
No.
Uh, so he has a book. He has a lot of other books that have a similar idea, but one is Breaking the Habit of Being Yourself. Um, and any books by him, and a lot of them are about like meditation and mindset change and I guess manifestation. And what got me onto that is I went to a really high level real estate meetup event down in Orlando, Florida. It was called the Commercial Real Estate like Investing School with Scott Shields. And down there, you're around some extremely high level guys that are of usually like people, they have different like levels, and usually the diamond guys, like the higher levels, they start at $20 million portfolios and up. That's like the cutoff. And there's guys there at $200-300 million portfolios, and then they present deals that they're looking to fund to the group. And one of the biggest guys there, one of the largest funds, he attributed a lot of his success to the meditation practices in the book of this guy Joe Dispenza, which got me onto it. And as I read it and I take it into consideration, it's very great information, and everything he has to say is wonderful. So, and it just goes back to personal development. If you want to make it in this industry or any industry, and at a very high level, personal development is by far the most important um, thing to study, even more than the real estate itself.
Matt, thanks for letting me push the needle on that. I got 4 books out of you, and it's like, I want to another one. And you've given me something to look forward to besides work when I get back, because there's no Barnes and Noble down here, right? All
Good
right.
thing we have the internet, Brian. You can download it pretty quick, which is nice.
Well played. But I'm old. I like the book in my hand. I want to highlight it and all that. Because
Absolutely.
I got my 3 screens here, and when I'm plugged in, it's like I don't even want sound on. You know, I'm locked in. Yeah, I don't drive enough. That's the thing. Everything is 15 minutes away here. So you don't even get through a chapter. I mean, when I was young buck like you, driving all over the place doing the properties, yeah, I'd be in the car hour and a half. It's like, yeah, Think and Grow Rich, or Michael Gerber's book, all that. I would just eat that up, Silverado University, and love it. But it's a little different down here now. My toes wiggle sand and I turn pages, which is still okay.
That's wonderful. Yes, that's what we're all chasing, Brian, you know?
When you get here, you still got to have goals. You still got to have that purpose. You still got to have, what mountain am I going to conquer today? It's crazy, but the valleys can be fun sometimes because they make you feel alive.
Absolutely. The worst parts of my life when I was at the total bottom are they've honestly been a blessing in disguise, because they've definitely made me who I am today, and gave me the ability to do the things that I was able to do. But in the moment, damn,
Yeah,
it
it
sucks.
sucks,
To say the least.
but it forged you. That fire built you into a stronger metal. So here you are. You've got your game going on. You've got your mindset. Who knows what's tomorrow? So what's next for you, and why not get started?
What's next for me? What's next for me is I'm starting to diversify my portfolio. I realized that I'm all into real estate. I didn't really own anything else except real estate. I had no stocks. I had nothing. And I was like, hey, it's time for me to start diversifying, especially since it's become significantly harder to find deals in real estate that cash flow, just based on a part of where we are in the cycle, I think. Um, so I started looking at other avenues for investing, and just going kind of the people that I knew, friends, colleagues, and seeing where they were making money. And honestly, I like to follow private equity. So private equity was rolling up a lot of real estate businesses. They've kind of taken a back seat to the real estate stuff, unless it's a good deal, like a really good deal. And a lot of the private equity funds and cash is flowing into roll ups for like small home services businesses. So I've invested in a small pest company. I've invested in a restaurant down in Fort Lauderdale. And they've done well. So the pest company is a newer investment, but it's just a lot, especially when you can build a portfolio like the size of that we have. If you can strap on and kind of bolt on some of these home services businesses, it's wonderful because you can add sometimes anywhere from 500 to $1 million in revenue to a building, to a business that's small. And then the next thing would be start to buy more businesses and roll them all up into one with the end goal of selling them. So that's what kind of gets me excited these days.
That's 100% all the ancillary businesses to support your real estate, like the butcher, the baker, the candlestick maker. I mean, you probably have a construction company. You probably have an electrical company. You probably have a plumbing company. You probably have a landscaping company. You probably have a mortgage broker company, right? It's like I had a guy on the show talking about virtual assistants once, right? And he was saying anything that you could sub out, like accounting or your marketing or whatever, you could own, right? Like you could own that company and then just VA the whole damn thing out. Why not, right?
Absolutely.
And if you're building a company that you already have a client base of 1,000 units, it's not that hard of a stretch for the risk.
Especially with, I mean, and both of us is how many guys do we know, or how many people do we know with large real estate portfolios?
Oh, yeah, right. Okay, ancillary businesses, you just got multiplied out 10x on clients.
It's kind of like an untapped resource for people in our scenario. So that's kind of what drew me to it.
Yeah, that's worth a nice long drive. Just thinking of all the businesses that you pay a check to right now, right? And could you make it work? Could you do it like with a name and virtual assistants at a fraction of the cost, right? Yeah, I think he was using an accounting firm, right? Two accounting firms merged and, they got rid of the people that weren't producing and they replaced them with VAs at a fraction of the money and the profits in that skyrocketed. So
Absolutely. Especially where technology is going today. I mean, how many people have real meetings? It's kind of wild.
Here we are.
Yep, exactly.
I don't know what you got on your feet, but I got nothing on mine.
I got some sneakers on, but hopefully not for long. They'll be kicked up.
Sneakers will work. So yeah, that's pretty interesting. Looking at the operations and, I see the strings, I see the threads. This goes all the way back to the beginning for you. It hasn't really changed. The dynamics have changed, but the fiber hasn't, right? You're weaving a new carpet, but it's the same fiber. I like that a lot. This has been nice to get know you a little better. So here's the curveball that wasn't on your list of questions.
I love it.
I love this question because I never know where it's going to go. What's the question I should have asked you today that I didn't?
Wow. Maybe where I think the biggest opportunities are right now to make money.
Matt, where do you think the biggest opportunities are right now to make money?
So outside of real estate, of course, and finding good deals, I would say that a lot of people underestimated, I guess, like the stock market and everything that's related to crypto. And I do see a lot of this happening, but I think right now we're at a pivotal time in America where tariffs scared the market immensely. Everything dropped in some cases 90% if you look at some of like these larger crypto assets and things like that. and I've been seeing this in real estate as well, as there's less cash buyers because of this. I think there's a massive opportunity um, to buy stocks and bonds and things like that. And I'm big into cryptocurrency right now. There's a 2x leveraged ETF of like Ethereum, which I'm actually all in on. That's my biggest position right now, and that's kind of what I'm holding. Um, and I do think that interest rates are going to drop, and we might be in the hopefully the potentially best 3 years for profits of my lifetime anyway. So I'm very weary of that and putting my chips with that mindset top of mind, because I do think that we are going to see some explosive growth over the next 3 years. And real estate as well. I think it's all going to explode. And I think there's a lot of really good investments, but one of the most important things is realizing where the best place to put your capital is, because it's not about finding a deal at this point in my life. It's about assessing every deal, both upside and downside, and making the best decision. And I think that that's the next phase of success after you've like built a very solid base. Um, Being able to vet different deals for both the upside and the downside, and and put the money that you've made to work for you in the best possible way while insulating yourself from tremendous downside is that's the that's the most important thing to me right now. Now that um, I've built a little real estate portfolio.
Yeah. Cozy, nice.
Yeah.
So here you are, 32 years old. You've accomplished a lot.
Thanks.
You've come a long way. I know from doing this a long time, you've got another 60 years ahead of you. And that is so exciting that you have the experience, you have the mindset to get you there, and you have the time to leverage a higher amount of risk that I can't right now. I can't assume the risk because I don't have the time you have. So I'm giving you a really good inspirational comment here. I mean, you may feel like, and I may feel like we're going to live forever, but with what you've got and the assets that you've built and the mindset that you've built and the discipline that you already had working at that desk for a year, paying to work there, you already have that. I'm so excited to see where you're going to be at the end of these 3 years, 5 years from now, 10 years from now. You know, I'd love to hear the follow-up story to the story.
One of the most important things that I will add to all this is that I think is a lot of guys just try to get the cheapest option, whether it's renovations, whether it's professional services, whatever it may be, construction. Um, the most important thing also is you want to keep, I look at it as you want to keep the money in the circle. So you might pay a little bit more, but you know this guy, you trust this guy. I want to lift up all the people around me as well, because it's just so important. And when you keep the money in the circle, like my friend's doing, like a close friend of mine's doing a painting, but you have to manage that relationship because they're a friend, but in this scenario, they are a business colleague. So that's a delicate situation to handle. But once you get to a certain level, and you get used to those types of conversations, and if both people are very mature, like you can work through very difficult stuff. And that comes with the personal development aspect of it. But if you can just keep all the money that you're spending in your personal circle to lift the guys up around you and build just a solid group of just killers, that'll take you so far. It's unbelievable. You could take over the world. So that's one of the things I'll end with.
There's the mic drop. All the way back from the shark who wrote out that this is what I really want out of life. And here you are. And the world is an ocean, man. You got a long way to swim. And I'm looking forward to your journey. So, if any of our guests on the show today are looking to reach out to you, maybe they want to find out more about you, invest with you, find out what your business needs, and maybe work for free for you for a year and whatever it might be. Anybody who's looking to find you, how should our viewers get in touch with you today?
If somebody really wants to get in touch with me, I will make the time for them. It might not be that day, but I will make the time. I promise. You can call me or text me on my personal line. It's 978-806-5974. And I believe in helping everybody that I can. The biggest thing is, like I'll say, is if somebody has the mindset, I'm happy to feed them. But if somebody's just looking to kind of for a handout or kind of suck my energy away, I mean, I won't even spend a second of my time, unfortunately. But that's just and the one of the last things is for new guys, for new people getting into anything that they want to be successful in, the people that you surround yourself with is literally the most important thing. And they might be friends that you have, family members. You have to avoid toxic people like the plague. And if they're not lifting you up, they're bringing you down, and you have to cut them from your life. At least maybe not entirely, but you really have to cut your the amount of time you spend even near them, because energy is real. And there are people that will take your energy and they will shoot your dreams down, whether you're conscious of it or not. And you have to be around people who lift you up if you want to be successful.
Yeah. If you hang around with four broke guys, you'll be the fifth.
Absolutely.
And I hope I was able to add to your energy today, because like from the get-go, you were just operating a high level, and I wanted to keep pointing it out. Anybody who's watching this is seeing this, that, your normal day, some people can't comprehend.
No, that's true.
Because you're at a vibration or a frequency or a level, whatever you want to call it, manifestation. Like my dad, right? My dad was a builder. When way back in the 60s when he was building, they didn't have all this manifestation and vision board stuff, but he would sit me down and say, son, when I build a house, I build the whole thing in my mind first. I see the whole thing. And then when I get to the job site, I just do what I saw.
Wow. That's amazing.
Yeah.
That's it right there in a nutshell.
Yeah. And this was way before they had all these, gurus or classes or anything like that. So, my dad got me here, and I got goosebumps here. And, there's going to be a day when you're teaching your son some of this stuff. And I hope that's going to be a wonderful experience.
I won't give him shit, though. I'll tell you that. He's got to earn it.
My dad had me carrying plywood at 13. He says, you bring it upstairs and come get another one.
And that's the school of hard knocks. And I think that's a tough thing for parents today is to kind of, be that tough parent. I feel like everybody's babies their kids, and then they can't figure out why they didn't become the person they thought they would be.
And on that note, Matt Perimian, you brought it today. You have a great story. You have great energy. I'm excited that you showed up. I'm excited that you brought all this energy. And thank you for letting me follow you down some of these rabbit holes, because, that's the fun for me. You'll say something and we'll go off script, and I love that part of the show. Any last words for our audience before we let you go today?
I would just tell everybody to keep chasing it. And like I said, I can't emphasize enough personal development, from the food that you put in your body, from the habits, your daily habits. It's all one. You have to eat, sleep, and live your life of success. And that has to attribute to every single aspect. Personal relationships, whether you're with a man or a woman, whatever it may be, that is a very important thing as well. You need to have good people around you, good relationships. You need to be a good partner, and that person will reciprocate that energy. And it's just, once you live all aspects of your life in this frequency per se, you'll be amazed what you can accomplish.
Beautiful. Thank you, Matt. All my real estate peeps, entrepreneurs, rock stars. This is Brian Lucier, blown away with another guest. Here I am on the Why Not Real Estate podcast, signing off, and we'll see you on the next one.
Thanks again, Brian. Take care.